Hey guys, I want to give you a quick tip on how to keep your interest costs down. Whenever we get a loan inquiry and we've run an assessment for a client, the next step is to run the deal past the different lenders in question. Okay, so we will call the bank rep and we will run the deal past them. The first thing that they're going to ask us is what is the LVR of that deal, right? Now, the reason they do that is because they mitigate risk with the cost of funds. So what I mean by that is the higher the LVR, the higher they're going to charge, right? Because the risk is greater. So the aim of the game is you want to get the LVR down to 60%, okay? So if you started at 80 or 95 or whatever the case may be, you want to get it down to 60. Now, some of you will work out your LVR, and by the way that you do that is you take your loan amount, you divide it by the property value. So let's say you got $800,000 loan, you divide it by the value, say that's $1 million, that's an 80% LVR. Now, what you want to do is, let's say you're on let's call it 71 or 72%, right? That's on the border of getting 70% pricing, right? So what you want to do is try to get it down to 70. Now there's two ways of doing that. You either pay down the couple of percent to get you down there, or what you can do is you can shop the valuation with your broker. So what you do is you call the broker and you tell them to run a bunch of valuations with the lenders in question that you want to go to and see who will give you the highest valuation and the best rate. And then that way you're now getting the best pricing available to you by that lender, because a lot of people are just over by 1 or 2%, and that's what can make a 10 basis point difference. Follow me for more tips.